It was a sea of red once again across markets and asset classes. Markets have been stress tested since the Iran war broke out 3 weeks ago. Now there is more escalation. US officials signaled sending hundreds of Marines to West Asia to seize Iran's Kharg Island oil export hub, and Brent crude was around $110 a barrel, suggesting it is no longer a temporary spike. The situation in the bond market is equally concerning than what is happening with oil prices. Crude extended its rally into a week of escalating tensions in West Asia. Oil is up over 40% since the Iran war started. Gas prices are up 30% in a single month. Diesel just crossed $5 a gallon for the first time since 2022, and gold marked its worst week since 1983, crashing over 10% to end the week, around $4,500 an ounce, and the yellow metal is now down over $1,100 per ounce from its record high seen in January. Bitcoin barely held above $70,000. The top token fell for 3 straight sessions and down significantly from over $76,000 earlier in the week. Now, with major assets covered, let's shift focus to the Asia-Pacific markets. Stocks in the region experienced high volatility, characterized by a sharp sell-off on Thursday, followed by a partial and a cautious rebound on Friday. But all the major benchmarks closed deep in the red, barring the Indian indices. The Sensex closed out the week nearly unchanged, reversing a bloodbath on Thursday. Chinese and Aussie stocks took the biggest hit in the region, and Japan also closed out the week in the red. Now, in the Americas, Wall Street stocks slumped. U.S. stocks erased over $1 trillion as Wall Street benchmarks hit a 6-month low. The S&P 500 posted its lowest close of 2026 on Friday, erasing more than $3.2 trillion in market value since the Iran war began. The tech-heavy Nasdaq closed out the week with over 2% losses. The Russell 2000 is officially in a technical correction, down over 10% from its record high. Other regional stocks also ended deep in the red. Now, looking across the Atlantic, the sell-off was more deep. The International Energy Agency has issued a warning stating that the Iran war is the greatest threat to global energy in history. Europe is now bracing for another wave of inflation amid a worsening energy crisis. The UK's 10-year government bond yield rose above 5% for the first time since the 2008 financial crisis. Europe once led the world in productivity, but now trails the US by about 20%. The problem is scale. Too many companies remain small. Benchmarks across the region crashed over 3%, with investors bracing for more losses in the week ahead.